Friends, in this video, I'm going to touch upon a very burning topic and relevant topic in the current scenario. How this war between US, Israel, and Iran is going to impact the stock market, Indian market as overall, and market globally, right? Guys, we have seen over the last couple of weeks, our stock market has lost almost 25 lakh crores of the valuation, right? There's almost 10% of the correction in the market, and most of the investors, they have burned their finger during this correction time, right? Now, we want to understand through this video, what would be the real impact of this war in the short term and on the long term, okay? What sort of sector or stock which will do well in during this time and which stocks will not do well, okay? We'll talk about the different phases we can expect a market will go through during this time, okay? So I'm going to discuss everything in detail, okay? This video can be a bit lengthy, but that's worth watching, okay? So let's discuss. First thing, why this war between US and Iran is impacting Indian stock market. As a layman, everybody is, has this question in the mind. Okay, how we are impacted. So guys, the impact is directly coming from the oil prices first. Okay, because of this supply disruption, we have seen there is a sharp jump in the oil prices. Prices have increased from $60 per barrel, which was average price before war, to $110 per barrel. Now you might be wondering, okay, if there is increase in the oil prices, then why it is hurting every sector in the market? Guys, the thing is, when the oil prices increases, then what happens? Inflation will increase because India is a 80% importer of the oil, right? So if oil prices increases, obviously our import bill will increase, okay? Inflation will increase, and I'll explain you how this will result into increase in the inflation in the later part of this video. And increase in inflation will result into increase in the interest rates, and this increase in the interest rate will definitely impact the demand across sectors. Okay, there is definitely a decline in the sentiments in the market because of this overall impact of the oil prices on the various sectors. Okay, the second thing is dollar INR depreciation. Okay, so Indian rupees have touched lifetime low 93 rupees 30 paisa the time I'm recording this video, right? So this is also hurting sentiments of FIIs and the investors who are putting money into Indian market, because when the dollar appreciate and rupee depreciate, their investment value also goes down, right? And this further, that situation is more scary for them, because now along with the market correction, the return will further go down when they will convert these INR into dollar terms. Okay, now friends, let's quickly understand how the market will take shape going forward. Okay, so if I tell you based on the past data, okay, we have seen various wars, right? Situation like this. So how the market have behaved, so based on the research what I've done on the previous situation like that, see, initially what we are the first phase which we are right now, there would be a panic in the market. Okay, they would be selling all over. Okay, so there would be panic selling, all the sector stocks will be beaten down irrespective of whether they will be impacted directly or indirectly by this war thing. Okay, so there would be sharp correction during this time frame, and this phase can last for a couple of weeks to or maybe a month or two, till the time the situation does not stabilize. Okay, the second phase would be, call it a sector rotation phase, when investors will start applying their mind and they will start becoming selective in terms of stock selection in the market. They will try to understand, okay, which sector may do good or may not do good because of this situation. The situation is what? Increase in inflation, increase in the oil prices, depreciation of Indian rupees and all. So they will become selective in the market. Okay, so some sectors stocks will start improving before the other stocks start showing performance. So that phase, I call it a sector rotation phase. Okay, the third phase would be a recovery phase. If the things stabilize, okay, and oil prices move back to the normal one, then you would see sharp recovery in the market, and that recovery can be as sharp like you may not get the time to invest into the market the major chunk of your investment, right? So that would be a recovery phase. Okay, and that is bound to happen, guys. This war is not going to last forever, right? So it is bound to happen, but when it will happen, we have to wait and watch. Now thing is, guys, let's understand what are the factors, what are the macro level factors which is impacting, hurting the stock market, okay, our stock market, Indian stock market. So friends, the one of the biggest factor in this market correction is the definitely oil prices. So increase in the oil prices will result into what? As I discussed, it will result into increase in the inflation increase will result into increase in the interest rate, and increase in the interest rate will dampen demand side, okay, for all industries, okay. So this is how your revenue growth will come under pressure. The second thing is increase in the oil prices will increase logistic and transportation cost for most of the manufacturing companies, and this will result into increase in the cost and increase pressure on their profit margins. So there would be double whammy for the companies. One, there would be a moderation in their revenue growth, and the second, there would be increase in the cost, and this will result into increase in the pressure on their profit margins. Now friends, let's talk about, so this is what briefly about how this war is directly indirectly impacting Indian stock market, okay. Now let's talk about sectors which are most beneficiary because of this war situation, okay. May not be in the immediate basis, but maybe in the near term, okay. So sectors would be, guys, first sector, which is very obvious and you can guess that as well, defense sector, because obviously because of this war situation globally there would be increase in the government spending on defense side, okay, and this increase in the spending will result into obviously increase in their order book, and order book increase will result into their future revenue growth as well as expansion into their profit margins, right guys. So this is one of the sector which will definitely benefit a lot because of this, and we have already seen that all the defense sector in the market, they have outperformed index over the last couple of weeks, right. Couple of stocks which we can name here in Indian stock market. And guys, one important disclaimer here, I'm not recommending you any stock in this video, it is just for the educational purpose. So a couple of defense stocks which are prominent in this segment is BEL, BDL, HAL. So these are the stocks which we can say are defense stocks which are listed in the market, okay. Now friends, let's move to the second sector which may be the another beneficiary because of this war situation. I'll say metal and mining sector. Now how metal and mining sector will get benefit out of this situation is because of this war there would be a definitely disruption in the supply chain, and this supply chain will increase the prices for the metals like steel, copper, aluminium, and also for the mining companies, right. So their profit margins will increase because the increase in the prices will definitely increase their profit margins, their sales, everything will expand, okay. And obviously after this war, when the things will stabilize, that there would be lots of infrastructure spending also to rebuild things, and especially in those areas where this war is happening, right. So definitely demand is going to increase. So in this sector, guys, in the metal and mining sector stock, we have a Tata Steel, JSW Steel, Vedanta, and kind of stocks are there, Hindustan Copper, Hindustan Zinc, and all. The third sector which can be benefited a lot in the short term because of this is oil companies, but not the downstream, upstream oil companies which are into mining of oil, okay, production of oil, because increase in the oil prices will directly impact their sales, their profit margins, and all. So companies like ONGC, Indian Oil, they will be the biggest beneficiary, okay, because of the situation. Fourth sector, guys, I'll say the precious metal like the gold ETFs and all, and companies who accept gold as a mortgage like Muthu Finance and all. So these companies will also get benefit out of the situation, right guys. And the fifth sector could be a pharma sector. Why pharma sector? Though there will not be any direct impact on the demand side, but companies which are mostly dependent on the export, right. So because of the depreciation in the Indian rupees, the USD value will increase. INR, in terms of INR, the value of export will increase and they will get the direct benefit out of it. In some cases, you can say IT companies also, but there are other concerns also related to the IT companies, AI thing and all. But if we ignore that part, then definitely IT company could be the another beneficiary because of the rupee depreciation in terms of dollar. So guys, these are the couple of sectors you should focus on to understand, okay, which sector will get the maximum benefit out of this war situation. So it's not just a negative thing for every sector because of this war. There may be few sectors which will get a direct benefit out of it, okay. Now friends, let's talk about the sectors which will get a worst hit because of this war thing, okay. So the negative impact basically. So the first sector which will be impacted a lot would be aviation sector, because the thing is 40% of their cost is the oil prices, right? So because of increase in the oil prices, definitely the input cost will increase. This will directly create a pressure on their profit margins, and demand side is also affected because of the increase in the inflation and all. Interest rates will increase and all, right? The second sector which will be impacted by this thing is paint sector. So why paint sector? Because the derivative of crude oil is the key raw material, right? So with increase in the oil prices, you will see there's a increase in the cost and direct pressure on the profit margins. The third sector which can be impacted because of this war thing, and negative impact is obviously would be a banking sector also, because guys, when the interest rates will increase, right, then there would be definitely a negative impact on the demand side of the loans. Okay, so demand side will loan growth will fall down, right? The second, because of the increased interest rate, their profit margins, their net interest margins will also be compromised. So guys, these are the couple of sectors where I can see direct impact, and the other sectors also, let's say infrastructure sector also, where which are mostly dependent on the import side. Okay, so with the increase in the raw material cost, definitely there would be direct pressure on their production, right? Cost of construction, right? So these are the couple of sectors, guys, and there can be many more. So just give you an example where there would be direct and indirect impact of the oil prices, cost of funding and all. Okay, now what you should do as an investor, should you be very selective here? You should just invest your money into defense sector or metal sector, or you have to be more prudent here. So guys, my suggestion would be you should be diversified here. Okay, you should not just put your entire money into those sectors which we see, okay, in the short term gonna to do best in the market. Okay, but you should be diversified in terms of like maybe 20-25% of your portfolio can go to the defense side. You can allocate 15-20% stock of your portfolio into the metal mining stocks, and also you can think of adding precious metal in your portfolio, 15-20%, maybe the gold and all, ETF, etc. And maybe I can also think of adding index funds, right? Because nobody knows how the things will take shape in the future. So index is what? It's a composite of all the sector, most of the sectors which represent the market. Okay, so some part should also go to the index funds. So this is how, guys, you should decide your allocation. But one thing is clear, the impact what we are seeing right now, this war situation which has resulted into sharp correction in the market, that situation is not gonna to last forever. Okay, sort of it's an opportunity for the investors to buy stocks, to invest into the market at a lower level. Okay, so no need to panic, especially for those investors who are the investors in the cash market. Cash market means who are not taking FNO positions, because in case of FNO, yes, bets are risky because you have to maintain your margins and all. But if you are a cash investor, you need not to worry about these situations, because we have seen in the past many war situations, market has recovered back, and in fact they recovered much faster than what it was before the war. Right now, friends, let's discuss how you should factor impact of war in your valuation models. So as I'm coming from the valuation background, so I always relate things with my actual outcome in the valuation. Okay, so in case you want to do DC evaluation of a company, okay, so you're doing a DC evaluation of say paint company, okay, as maybe say Asian Paints. Okay, now how you should factor these changes into your models. Okay, so I'll divide these changes into three parts in my financial model. One, revenue side. Okay, when you're projecting revenue of the company. The second change would be changes in your profit margins, EBITDA margins, and the third change would be on the cost of capital. So let's discuss one by one briefly. Now, when you're projecting your revenue, then you should consider, how this situation, this increase in the interest rates, increase in the oil prices will impact revenue growth of the company. So with respect to the paint companies, Asian Paint, definitely there would be a negative impact. Why there would be negative impact? Because their demand is directly related with the growth in the housing sector and construction sector. But because of this war, the interest rates have increased, and increase in the interest rate will definitely dampen the demand for the housing sector, right? And directly, indirectly, there would be impact on the sales of the paint companies also. The second side would be, profit margins. So when I'm deciding the profit margins of the Asian Paints, EBITDA margins, then definitely there would be a negative impact Okay, and before that, guys, when you're creating your revenue projections, because nobody knows what would be the impact going forward and how long this impact would last. So when I'm creating my model, right, I'll create a scenarios here. I'll say, okay, the base case scenario, right, the current scenario, worst case scenario, and the best case scenario. So these three scenarios I can create in my model. So I can say, okay, in the base case scenario, the growth is say 12% in the revenue going forward. Best worst case scenario, this growth can come down to say 8%, and in the best case scenario, it can go up to 14% also. So these kind of, so you have to create some scenarios in your model, right? Now the second is EBIT or EBITDA margins, profit margins, and definitely there would be a negative impact on their profit margins as well, because increase in the oil prices will result into increase in their raw material cost, and ultimately there would be pressure on their profit margins. Okay, so I'll create again scenarios here, EBIT margins maybe the 12%, 10%, 8%, something like that under the best case, base case, and worst case. Okay, now guys, in the third part of my DCF model, which is cost of capital, which is discount rate basically. So in the cost of capital, again there would be change in the variable, because the cost of capital, it's a weighted average cost of equity and cost of debt. Cost of equity depends on the risk-free rate and your equity risk premium, and because of increase in the interest rate, definitely there would be increase in the interest rate, and because of increase in the volatility in the market, equity risk premium will also go up. So if your cost of equity before war was 14%, maybe after war it so now in the current situation it can increase to maybe 16-17%, right? And this will also impact your DCF valuation. Okay, so here again we can create scenarios here. Okay, so if the situation becomes normalized, then my cost of equity would be this. If situation go further worse, then my cost of equity would be further higher, right? And if the situation becomes much better, then my cost of equity would be this, right? So this is how you can factor these variables in your model, guys, and see how these prices change in the oil, and how the interest rate changes will impact the valuation of your company. Okay, guys, and that's the reason, guys, when we do DCF valuation of any company, we always run sensitivity at the end. That sensitivity says, okay, how the valuation will change under different scenarios. Okay, so this is how you should factor impact of these variables in your valuation models. So friends, what I can say, your valuation models, when you're dealing with your valuation models, so valuation models are not about predicting future, right? It's about how you adjust your assumptions according to different scenarios. Okay, so you have to be flexible in your DCF model. They cannot be rigidity, because you're dealing with the future numbers, right? You're dealing with the future uncertainty. So definitely you have to keep some space of change in the valuation due to change in the input assumptions. Okay, so friends, this is about this video where we discussed various aspects of this war on your market, on your valuation, on the different sectors, and what are the key factors behind these changes. And I hope you now can comprehend the impact of this war on your portfolio, on your investments in a better way, right? So I'll come out with more videos like this in future. Till then, stay tuned, stay connected. Thank you.